I'm going to talk about the gold disconnect. The senior equity markets, the American ones in particular, are poised to crash. Gold is finally going to the moon. And yet the resource juniors are still comatose. What is going on here? And the blue is the traded value on the venture exchange by the resource listings. Why? Since gold's liftoff in February of 2024, has the resource junior sector not responded? So I'm going to talk about the two themes that in the last 2 years at these MIF presentations that have occupied my talks. One has been about the geopolitical conflict growing between the global West and East, personified by the rivalry between China and the United States, and what this means for future metal availability. And it's also linked to the gold trend. The gold trend for me has been a longer-term idea that by 2030, the difference between the American and Chinese economies will have shrunk a lot more. And by then, we will start having a problem that should demand or boost demand for gold. That, in fact, has happened in the past year, and that is very different. The other big talking point has been climate change and the implications for new demand for materials related to that technology. And this graph put together by the International Energy Technology Agency showed that we were going to need by 2030 50% more copper, 600% more lithium, 100% more nickel, 50% more cobalt, and 100% more rare earths, in particular the magnet ones, just to meet the requirements for the 2050 goal of limiting temperature change to 1.5 degrees Celsius. And that was above macroeconomic demand. So this was supposed to become a major push for exploration, especially in jurisdictions such as North America, where there was a shift to EV technology. Well, that has pretty much gone out the window in the last 100 days since Donald Trump has been inaugurated. And the writing was on the wall already last year when it became evident that he might win the election. And it wasn't so evident that they would win complete control of Congress, which in turn would end up just being a pack of spineless jellyfish doing whatever it is that their hero wants to do. And so we are now living in a system of executive orders where democracy is not really playing any role anymore. So what happened with lithium is we had this period of ridiculously high price. This is where it needs to be in order for the type of lithium supply to emerge. And in the case of nickel, we had China-backed Indonesia building these smelters fueled by coal plants and all that, basically collapse the nickel price and dominate now 60% of global nickel supply with the capacity to increase this. And this has had kind of a pretty negative effect on the whole lithium boom that I was quite enthusiastic about. And here you can see a world-class discovery made by Patriot Battery Metals. It's now languishing at $2. They completed a PEA last year, and it indicated a $3 billion NPV. However, it used a base case price that is 83% above the spot price. So basically, with the United States saying, we don't believe in climate change, we are anti-science, we're hostile towards the whole energy transition concept. At least from the U.S. perspective, this whole story is stalled. Now, China, of course, is not anti-science. It's completely switching over to electric vehicles. Europe is still trying to do it. So there will be a period, maybe 2027, when Toyota or one of the others delivers a solid-state lithium-ion battery, that it gets back on track, not because they're still trying to save the planet, but simply because it's a better car and you can use an electricity source instead of a gasoline source. Now, the copper story, we're now in an age of adaptation. We've given up expecting the future to be saved from climate change and warming. It's going to be air conditioning demand that will drive copper. Forget about all the EVs. That will still eventually happen. But so copper is also being driven by the growth of artificial intelligence and all the computing capacity that it needs and the additional electrical power to make that happen. And of course, rare earths, which is something we've been talking about now since the big boom in 2009 to 2012, it's not really making a comeback. We saw the spike during that period of 2020 onwards where it went up to pretty good levels, but it's back to this level. And China has pretty much dominated the space. It has created the China price. And the China price is now what dominates most metals out there, which projects in global West jurisdictions such as Canada and United States, with the standards that we have, they just cannot compete unless they come up with a discovery that has extraordinary grade. So what basically the whole Greta idea, it's dead. And we have several generations that are shifting into simply accepting that we are approaching an end times type of scenario. And that has also negative implications for our sector because these generations are not an audience for resource junior speculation. They are not there. They never had the chance. The Generation X, boomers generations, like the youngest boomer becomes a retiree in about four years. After that, the people who know this space are either retired or passing away. And insofar as they have a brokerage account, the brokers, they don't allow these elderly boomers to trade juniors. So the juniors are basically on their own, raising money directly from people who are worrying about how long their savings and that will last, while the other generation just does momentum trading in Bitcoin and other sectors like that. So most of this time until recently, this is what I saw as the competition. So global West versus global East, and the global South, which is the emerging market economies, kind of, trying to decide whether we're an autocracy or a democracy, with the global West, the United States and so on, encouraging democracy. And of course, China and Russia encouraging autocracy because that's far more efficient than democracy. And I saw the future eventually breaking down into two economic zones where you would look for metals in global West jurisdictions as the global East jurisdictions simply become separated and the globalized trade based on the China price is no longer available to global West economies. And here's the vulnerability, like just from this group of countries, the global West is 53% of GDP, the global East only 19.8%, and the global South 8.4%. And during the last 25 years, China has come out of nowhere and reached a point where it is 17% of the global economy, while the United States is about 27%. And the IMF projections show this as eventually converging, though with the whole tariff issue in the air right now, nobody really knows how the future of the global economies are going to unfold. Now, this is the graphic on which I based my optimism for a revival of interest in resource juniors. The blue is basically what the global West supplies of all these important metals and energy commodities. The red is what the global East nations provide, and the green is the global South. And look at what relatively small percentage this is for a group that's over 53% of global GDP. So if there is a split between global West and East, with global South siding with the global East, the global West has a serious raw material supply problem. And this, I figured, would end up creating the impetus for putting money into resource juniors to look for new deposits, to advance new deposits, and start thinking in terms of a higher future metal price to support this. So here's just a snapshot. These are all heat maps where China dominates because it has a natural endowment of deposits with these types of metals, and also because they subsidize the China price with low worker safety standards and low emission controls so that we cannot possibly compete on the same basis. The only way we can is to totally eliminate all those types of requirements for worker safety, for emission controls, and so on. And this also played out in the manufacturing economy. The rise of China corresponds with the decline of American manufacturing job, and it's since stabilized, but it's tracking sideways. And Trump's goal is to try and bring back physical manufacturing of goods to America. But here's a problem. This is the breakdown of U.S. GDP by sector. Only 18% of GDP involves making stuff. The rest of it is a service economy. And similarly, when you look at the breakdown of the jobs, only 16.5% is involved with making stuff. The rest of this economy is sustained by imported goods, while in the services goods there are still surpluses exporting it. But to try and move this percentage by introducing export or import tariffs, it's an impossible goal. And this is a problem for the United States because the economy is, in essence, a dancing queen in a hall of mirrors. And the plates of these mirror plates are going to start falling apart for groups like professional business services as AI starts to replace a lot of the jobs that the service economy supports. So this is the growth of the federal budget deficit, and it's about $2 trillion for the past year. And here is the exponential growth in debt. And part of this has all been made possible by China taking its trade surpluses and others, shipping the dollars back to America and buying T-bills and sometimes stocks, as in the case of countries like Taiwan, which owns $1 trillion worth of U.S. equities and bonds as a way of giving back the trade surplus from shipping all those chips to America. And with what the kind of turmoil that Trump has created with Liberation Day, this is about to upset this delicate balance. And by the way, the Doge Master has been busy hacking away at this, and all that has really accomplished is to completely strip the United States of its capacity to be a leader in research and innovation in science, in projecting soft power into the global south parts of the world to try and get them to swing to democracy. The real area, this $4.5 trillion goes to keeping alive the poor, the sick, and the elderly. And that, of course, creates a huge number of service jobs. They can't really cut anything. They can't do anything about the interest, and they certainly can't do anything about national defense now that we've created a situation of America against everybody else. And this, at PDAC, my favorite thing is to visit the U.S. Geological Survey booth, and this is what was there. The Doge Master had forbidden them to go to the largest mining conference in the world to interface with people from all over the world to talk about, how does America's security of supply problem get solved. It's incredibly stupid, penny wise, pound foolish. And here is why America has such a huge problem. When it's America against everybody, the blue is what percent of each of the metals it produces. The red is what Russia and China together produce. And as far as I can tell, despite Trump's efforts to declare himself Putin's best pal, Putin and Xi are still best buddies. So now we have this map of America first, MAGA land, against everybody else. And this has thrown all my assumptions into turmoil. I don't really know how this will shake out. We've got a 60-day pause on these reciprocal tariffs, and then it all starts again. And he's created a showdown with China with this 145% versus 125%. China cannot stand down, and because China has suffered for the last 100 years, whereas in America, the last people to suffer were the peoples who were in the 30s, and there's not many of them left to remember. America has no memory of economic pain. And when the economic pain starts to show up, the Americans will crack first, whereas the Chinese will just say, okay, more the same. We have to wait longer for this to end. So now the rest of the world is thinking, okay, there's no easy solution to this. China's sitting on $760 billion worth of T-bills that they're not so sure they still want to own. There's also not going to be shipping of cash back to America to buy T-bills to fund the federal deficit that keeps going. So as they start selling these Magnificent Seven companies who are all threatened by a slump in stuff being sold on the internet as cheap China stuff stops coming into the country and stuff from elsewhere. Where's this cash going to go? And also, you can already see Trump has managed to make the US dollar go down. Now that can be a good thing because it lowers the cost of your exports, except America doesn't really export very much in the first place, so I'm not sure how that is going to help anything. But as all these foreign U.S. stock and debt holders start to sell, where are they going to put the money? Into the euro, into their own currency, other countries' currencies, into Bitcoin? No person outside an American is at a high level is going to be so foolish as to buy Bitcoin, because that's basically a digital token reflecting the US dollar. It's a piece of nothing. So it's going up because Americans are buying it, but it's not what other people are buying. What the other countries are buying is gold. And this is a very interesting chart. The blue is the gold holdings of the main GLD ETF. Now you can see how it's tracking the rise of gold over here, these blips there. There is a disconnect between North American interest in gold and what gold is doing. So ordinary retail investors or family offices and that, they're not buying physical gold. Somebody else is buying physical gold. This is an incredible run since February of 2024. And you can see from the past year and a quarter, the daily changes. It's nothing. There's like no interest in the price of gold. Now you might ask yourself, why are Americans not interested in the price of gold? Well, it's no longer the old gold bug story about fiat currency debasement. It's now about the debasement of the American brand. And the gold bugs and all that, they were fine with fiat currency debasement and gold eventually going up, but they're not fine with this idea that gold is going up because America is going down. So they're not coded to be interested in physical gold, and by extension, they're not interested in our sector the way they used to be during those first 25 years, 30 years when I was in this business, started this in the first part of my business. Now, central banks have been blamed for doing the buying. Well, it certainly doesn't show up in the stats. If they are doing it, they're doing it by stealth, because nobody wants to really offend America and show that our gold reserves are going down while our U.S. dollar instruments and that are going down. China's have dropped from $1 trillion to $750 billion, but nothing on a very large scale. And so here you look at, say, China, who's a piddling 73 million ounces, and America still there, assuming all the gold is there, still the towering major owner of gold. But this graph is deceiving. This is China's gold production since 2000. China is the official buyer of all gold. What has it done with all that gold? this is how their official reports of central bank holdings during this period. Where did the 205 million extra ounces go? Did they sell it to American gold bugs? Is it possible that because they are such an extended organism which controls all these partly owned, state-owned enterprises, that they have hidden the gold inside the country, disguised the fact that they own all the gold that they produced and never dumped it onto the global markets? And if this is true, this is what this chart would look like. And that doesn't even include the gold that may have been bought in the open market, which clearly, that graph that I showed you of gold going way up, that has to have been somebody socking away an incredible amount of gold. Now, what if they came out and declared that, yeah, we actually own this? What would be the repercussions in the market, in the media, that China owns more gold than America? And by the way, we agree with the conspiracy theorists that there may not be much left in Fort Knox. So, given all this, that this time there's something different happening to gold. Why is it not catching fire with the market? And I think the main problem is market memory. In the past 15 years, we had this great rise here and this decline, another rise here, another decline, and now we have this incredible decline. The scale of the growth is the enemy. People are terrified of a palladium-like chart that soon enough gold is going to go back to 2000. So we've been fooled several times in the last 15 years, but third time, no way. I'm not trusting this one. I'm not going to buy gold producers. I'm not going to buy advanced gold companies. I'm not going to buy the juniors that are looking for gold. But how long can this attitude be maintained? So this is the most important graphic in this whole talk. Back here in 1970, gold had been fixed at $35 since 1933. And during the 1972, they finally unpegged it, then it became free-floating. The 70s were not a particularly great period for the United States. They had a shameful exodus from Vietnam. OPEC was putting the screws to them. They had inflation, and then they had the Tehran hostage situation in 1979, and then the Soviets invaded Afghanistan, like America didn't really matter anymore. And that helped gold to a high of $850, and it settled back to about $400, which became sort of the new normal. And we basically entered a 23-year bear market in gold sideways. But the problem was, this was a 400% real gain in the price of gold above whatever inflation was. And this turned high-hanging gold fruit in the ground into low-hanging gold fruit that was harvested. They more than doubled the above-ground gold stock in this big period. And of course, that kept the price flat during a period where America won the competition, Cold War competition against the Soviet Union, and we ended a supposed end of history period. Globalization flourished, and we ended up with the current situation that we have. Now, if you take $400 gold and inflation adjust it to the present, this is where it should be. So if gold is just a fiat currency debasement hedge, that's all it should be. The fact that it's way up here, which is 115% gain, this is big. We are in the midst of a massive repricing of gold as the world adjusts to an America which it can no longer count on to guarantee democracy within the global West, and hopefully eventually encourage China to become just like us. In fact, we have a scenario where America wants to become just like them. And this graphic of Vista Gold, which has been one of my top picks, really illustrates the opportunity of what's going on. They did their feasibility study, updated it in March of 2024. This is 5%, this is 10%. It barely meets the development hurdle with $1 billion capex here. And Here is where it is now. This project's worth $3.6 billion to $5.5 billion. And this is where what it would be at $2,500 gold. If gold lost 20-25%, this project would still be worth a lot. And right now the market's pricing it at 136 million US, as if this is never going to happen, as if gold's going back below 2,000. And so here, if we have gold retreating and stabilizing at 2,500, all of a sudden this stock will take off, because the fear of the big pullback in the price of gold will have been purged out of the system. And people, for example, like Rival Gold was talking earlier to, they're using prices like $2,100, $1,900 base case prices. It makes the projects look barely worth developing. Nobody's allowed to put any of these current gold prices into their models because of all these rules of 3-year trailing averages. But what's going to happen is we're going to see gold not go below 2,000. Over the chaos over the next 12 months, we may see it go to that $5,000 to $10,000 level. It won't stay there unless we have true fiat currency debasement in America. But when it settles back, it'll be at 100% to 200% real price increase that will be long-term. And when the market accepts that, that's when this sector has ignition. The producers are already doing well. This year, the producers have outperformed gold. They're up like 40-45% versus gold's 20% or whatever it's up so far this year. The ounce in the ground type project. This is right now the sweet spot in this space. The market is not taking the current gold price seriously. It's not taking seriously. It could go a lot higher. And when it comes back, it's still going to be high without huge inflation in the system. And the inflation that we're dreading, that's going to be an American phenomenon. It's not going to be a Chinese phenomenon. It's not going to be a Canadian phenomenon. It's not going to be an Australian phenomenon. These American projects are going to be the ones that get hit by the metal-intensive tariffs that increase the cost of CapEx. And to get here to wrap up, this is my favorites collection. It's managed to be up 16%. There's 24 companies in it. And I've changed what I'm doing. I'm trying to relaunch from where I was like 30 years ago when I had a $99 a year product. That inflation adjusted would be $200 a year. But because I see we're at the beginning of a monster bull market led by gold and ultimately by all these other metals, depending on how the global East-West conflict settles out. I now have a Substack version, which is a subset of Kaiser Research, available for $10 US a month on an auto-renewal or $100 basis. And I am not so much aiming it at you folks here who are experienced with all this stuff. It's really aimed at these younger generations that I want to pull into this sector, teach them and educate them. And this is what I mean. Forget this crowd. You guys, I want for my Kaiser Research. But for these younger crowds, that's what the new Substack thing is about. And in my bottom fish collection, which is not really available to the Substack, there's 110 fantastic juniors there, all waiting for ignition and liftoff. And it's already up 31%. That's 110 companies that are up 31% as a group. These are bottom fish, companies that have a missing piece or whatever. So you can see, even though it's not really visible in the trading value and all that, it is starting to happen. And for you people to be here now and doing your homework, your timing is exquisite. And just to give you an example of, this was the IPV chart for Bold Ventures, various projects down here at target development stage. And here's from sort of the heyday when some of my past picks and that ended up getting bought out, $500 million wins, all starting at similar types of valuation. So if you want to completely go down the food chain, look at the discovery exploration companies that have their act together, that have assembled competent management teams. If they have private placements and you are eligible to participate, do it. This is a sweet spot. I do not know when ignition will happen, but I think this trade mess, this tariff thing, there is no easy solution to it, and the Humpty Dumpty event has happened. America has been pushed off the wall of its sort of global ordering status that it created after World War II, and I don't think anybody can put that together again. Thank you.